Give it up for Danielle DiMartino.
Danielle DiMartino.
Danielle DiMartino booth. All right, folks, let's bring back in the panel here. So a couple things that are standing out. First, the market reaction. Kind of muted so far. A lot of questions, actually a lot of answers with tariffs. This is the first time I've heard Powell mention tariff this much. Maybe he needs to because he went to 3% inflation from 2.7% in the last meeting, Danielle.
Well, okay, he's mentioning it after the tariff truce. I mean, this is so disingenuous. And he just said whether or not we're going to have any weakness in the labor market. 5.3% of Americans who are counted as employed are working 2 jobs. This man is absolutely being mean-spirited. I don't say that lightly.
You don't. You've actually been a major defender of Powell. I'll put that out there.
I have for a very long time, but right now what he's doing is overtly political.
Ali?
Wow, mean-spirited. Okay, yes. So the fact that we went to 2 cuts doesn't seem to be upsetting the market too much, but the fact that we were 1 vote away from going to 1 cut, like, I just don't understand. I understand what the bond market's doing. I don't understand what the stock market's doing. I think it will be interesting because usually from a trading perspective in the equities market, we have one thing happen the afternoon the Fed comes in and a different thing happen tomorrow after other markets have traded. We're closed tomorrow. Yeah. So I'm very curious to see what happens Friday, and I don't think it's going to be this rosy.
You don't? Okay, listen, it might not be this rosy between now and the close. We've actually seen that, too. Once they wrap it up, the market says we didn't get what we wanted. Yeah. So what do you think, Phil?
I think everyone's not talking about July 9th. I think in the behind closed doors, they panicked about July 9th, that they're not going to get trades. No, here's where they're going to be completely wrong. Assuming Scott Bessent is as good as I think he is, a guy I think he's brilliant. By July 9th, we get a number of agreements put in place. Suddenly, this inflation narrative is no longer important, and they're completely wrong, and they end up cutting twice into the end of the year. If they're right, that July 9th becomes a seminal date and we go back to significantly higher tariffs, another 15% on Europe, another 30% on China, then they would be right. But they're using that date as a way to pretend like things are worse than they are.
Right. And you have a Fed chair?
I do. The guy that I always saw in the back of my mind is the wild card. And I'll say it's a wild card other than Kevin and maybe even Scott Bessent if the tariffs are done. But the one I'll throw out there, the guy who came back second go-around, Kevin Hassett. I think Kevin's a wild card, granted, but why did he come back for a second go-around with the Trump administration? He's been the guy that's kind of the mouthpiece for them. He might be a guy that Trump can put in. He's very pro-Trump, very pro this economy. He might be a wild card that fits in really well with what Trump wants.
Yeah. Daniel, one more thing? It looked like you wanted to say something else.
No.
Okay. Mean-spirited. We'll leave it there.
No, mean-spirited, period.
Yeah. And by the way, we've seen presidents put in their person before in the past, and it turned out not to be their person. So let's go back and get more questions and answers with Jay Powell.
Objections. I realize this is, you have one group of officials that are putting down no cuts, another that are putting down more than one. And again, recognizing that could be difficult to summarize, but is it a matter of people having a different outlook or a different reaction function, a different commitment to defending against another inflation mistake? How did that play out over the last 2 days?
So you're right. This is often the case. We have a pretty healthy diversity of views on the committee. We did have strong support for today's decision and broad agreement that our policy stance does leave us in a good place. But I would point to 2 factors, and you mentioned them. The first is just that parties have a diversity of forecasts, and they do align with where their dots are. So if you have a higher inflation forecast, you're going to be less likely to be writing down, more cuts. But remember, as we see more data, we're going to learn more about where inflation is headed, and that means when it is time to look at resuming our normalization process, the differences you see should be smaller because we'll have seen actual data. Right now, it's just a forecast in a very foggy time. So that's the first part, is forecast. Secondly, people can look at the same data and they can evaluate the risks differently, as you know. And that includes, the risk of higher inflation, the risk that it'll be more persistent, the risk that the labor market will weaken. People are going to have different assessments of that risk. So that you put that in there too. So those are the 2 ways that the 2 things I think that drive these things. Remember though, as I mentioned earlier, with uncertainty as elevated as it is, no one holds these rate paths with a lot of conviction. So that's really where it is. It's a function of those things. And I think as the data come in, you should see those differences diminish.
If I could follow, you've said the policy is in a good place and that it's modestly restrictive. Given all the uncertainty you just talked about, tariff levels, uncertainty around the pass-through, is it price increases versus margin compression, some of the softness that Chris talked about in labor and housing, why wouldn't it be better to have rates at a more neutral setting as the economy heads into this period of very high uncertainty?
So if you just look backward at the data, that's what you would say, but that's not. We have to be forward-looking, and the thing that every forecaster, every outside forecaster, and the Fed is saying is that we expect a meaningful amount of inflation to arrive in coming months, and we have to take that into account. So I think a backward-looking look would lead you to a neutral stance, but we can't. We have to look at that, and because the economy is still solid, we can take the time to actually see what's going to happen. There's a range of possibilities on how large the inflation effects and the other effects are going to be. So we'll make smarter and better decisions if we just wait a couple of months or however long it takes to get a sense of really what is going to be the pass-through of inflation and what's going to be the effects on spending and on hiring and all those things.
Mr. McKee.
Michael McKee from Bloomberg Radio and Television. Your friend down at 1600 Pennsylvania Avenue continues to lob insults in your direction. And I'm wondering, given now that the Supreme Court has maybe carved out the Fed from some of the legal implications of that, whether this is just noise that the markets and everybody should ignore until your term is up, or whether you worry that it could lead to more pressure on confidence on Wall Street, on consumers, about the outlook for the economy?
Look, from my standpoint, it's not complicated. What everyone on the FOMC wants is a good, solid American economy with a strong labor market and price stability. That's what we want. We think our policy is well positioned right now to deliver that and to be able to respond in a timely way as the data lead us around. The economy's been resilient, and part of that is our stance. And again, we think we're in a good place on that to respond to significant economic developments. That's what matters. That is what matters to us. Pretty much that's all that matters to us.
I need to ask, assuming you are not reappointed, would you stay on as governor when your term as chair ends?
I'm not thinking about that. I'm thinking about this.
Andrew.
All right, we've got to jump in here because that was the question. I'm surprised it took this long. We knew he would bristle at that, the question, but it is the 800-pound gorilla. It's in the air. But I don't think it's just President Trump. I think a lot of people are frustrated with the Federal Reserve, and they don't understand the urgency to cut rates last year before the election with similar circumstances, and now the reluctance, Phil.
It comes down to this, that they seem to, and I'm going to hope they're not political, they are doing all they can to not let rates go higher, inflation go higher. So they're willing to sacrifice the American public who makes less than $100,000 a year by keeping interest rates higher than they should be. It's just that simple.
So somewhat like the ghost of Arthur Burns, but so the little folks don't matter then, Allie. You believe that?
Look, we've talked a lot about this on this show, that every stat we look at, in addition to being archaic and not telling us much, the average in this country does not matter. It is irrelevant. It tells us nothing. I saw a stat recently that said, going back to stats, that something like 70 cents of every dollar that's spent in the retail market is spent by the upper 10%. Right? The kind of things that we're looking at we are not one population, one economy, and so this concept of that he's managing to everybody needs different policy right now.
So what I hate about that, though, Danielle, is that in order for the Fed to have an epiphany, it means that the richest people in America have to really start suffering. If they suffer, that means everyone else is done. I mean,
Yeah, but everybody else is already starting to be done.
Right.
Now they're just waiting for that top 10% that's 49.7% of consumption in the last year. But policy shouldn't just be made for them. And the worst part about this is, Charles, is their own beige book, on the ground, real-time information is telling them that across the country, the labor market is anything but solid. It's their own research.
Yeah. All right, let's go back and take a listen.